So mortgage rate races towards 8% after hitting a high not seen since late 2000. Okay, this is a CNBC story that we're talking about. This is here's what it looks like.
Rob, get the mortgage calculator from Google up.
Yeah, that would be perfect. So the average rate for a 30-year fixed mortgage rate surged to 7.72, the highest since the end of 2000, driven by rising yields on a 10-year treasury, which has been climbing due to strong economic data. Mortgage rates, which had briefly dropped to around 6% at the beginning of the year, have been steadily rising over the summer, impacting home sales despite strong demand. There's a possibility that rates may exceed 8%. The higher mortgage rates have adversely affected housing affordability and a new and existing home sale markets, causing home builders' sentiment to decline. For example, a borrower purchasing a $400,000 house with a 20% down payment on a 30-year fix faced a mortgage payment roughly $930 higher compared to a 3% rate during the height of COVID pandemic. So check this out. Pull up the mortgage calculator if you can. All right, let's say you do $500,000, okay, is the loan, 30-year fixed, and take that to 8%. Okay, take that to 8%. Okay, so the payment is what? $36.69. Just write that down.
$3,700.
$36.69. Okay.
Wow.
Now,
roommates.
The only thing I want you to change is just change that 8% to 3%, which was what it was 18 months ago, 2108. Okay. So 2108.
Almost $1,500.
You're talking about $1,551 more. So do 1,551 divided by 2108. What's 1,551 divided by 2108? 1,551 divided by 2108 it's a 74% increase on mortgage payments. So now, Rob, if we do this, take the 2108, just pull up a regular calculator, and divide the 2108, put 2,108 divided by 0.36. 0.36 equals, that's what the bank is going to want to see for your income.
Times 12.
What?
Okay? No, hang on. So the bank is going to want your monthly income to be $58.55.
Jeez.
Do it now times 12 to see what the annual would be. Okay? Equals what? So they want a $70,000 your income to qualify for a $500,000 loan 18 months ago. Now, go clear the whole thing up.
Real quick, why'd you do 0.36?
That's the debt to income.
Gotcha. That's what you need to be making.
Yeah. So now,
explain that for a second. Your bank is evaluating you, right? For people listening.
So the bank is looking at you saying, can this guy afford to buy this house? How much money do you make per month? So they'll take the mortgage payment and divide it times, the typical number is going to be 0.36, and you get that number to know this is what you need to make to be able to afford to buy the house. So now watch this. Go to the 3669. So same house, same area, 18 months different, rates are 8%. Now divided by 0.36. Now the bank wants you to make $10,191
times 12.
So
over $100,000 a year, you're saying?
Yeah, wait.
Guys, they want your income
How about
to be $122,000 to qualify for the same house. So then the question, so then you ask the question for the strikes, and you say, okay, why are they striking? Maybe because they can't afford to buy the house. Mm-hmm. So Bidenomics, guess what? More he talks about Bidenomics, it's the worst thing he's doing for himself, the more he's talking about Bidenomics. And outside of this, you know what's the first default that's shown right now? You know what is the first default? Because right now...
Commercial real estate?
Well, we're seeing on a lower level. So let's categorize the defaults. We have car payments. Under car payments, we have good credit car payments, and we have D-paper, which is subprime car payments. Then on mortgage, you have what? Regular people that got mortgages that have good credit. Then you have subprime. Then you have commercial real estate is what? Regular people that got good, commercial, some of them that did hardcore financing. You have school loans, okay? You know what is the first thing right now that's defaulting right now? Is subprime car payments is up, skyrocketing.
Which is core workers that have a reasonable amount of debt.
Yes.
Yeah. And they're probably paying 15%, if less, more, whatever it is.
Yeah, so because these guys' credit is not 750, their credit score is a 650, 620. And they're trying to get car financing. You ever gone to a dealership to get a car financing with bad credit?
Oh,
your payment is 30% higher, 20% higher.
That guy, if you're in that financial situation, probably don't understand interest rates for all that matter. But when you walk into the car lot, They're like, how much does your monthly payment need to be? All right, yeah, I can afford $350.
Well,
They don't look over here that you're paying 18%. That's how
payment-based
That's how
culture.
car companies,
You're absolutely.
that's how they make their money on finance.
But
Don't look here.
Let's describe one of those subprime workers Pat's talking about. How about this? A nurse at Kaiser Permanente making $65,000 a year, 7 years out of school, still with school loans. She is a subprime borrower, and she is currently in a picket line.
Yeah.
So that is the reason why I believe a lot of these strikes are taking place, because the economy is destroying the average guy today.
Yeah.
It is destroying the average guy. You know who else is starting to default right now? Who else is starting to default right now? By the way, you know WeWork at one point was a $47 billion company. WeWork. You've heard of WeWork.
Yeah,
They just defaulted on a payment. Rob, type in WeWork default payment. I think it's a $95 million payment they just defaulted on. Zoom in a little bit. $95 million payment they just defaulted on.
What?
So shared office space rental company WeWork said it wouldn't be making interest payments on about $95 million due Monday, and its shares fell at an all-time low. WeWork said it would use its 30-day grace period for the debt payments to hold discussions with certain stakeholders and to enhance its liquidity. You miss on a $95 million payment. Now, you may say, dude, Pat, that's a lot of money. You were valued at $47 billion. So you know what this shows? Can you type in WeWork highest valuation? WeWork highest valuation. I think it's $47 billion. $47 billion, I was right. So you're a $47 billion. They get, look at this here. In 2017, SoftBank Group made the first of its total $18.5 billion investment in the company.
Wow.
95 million is what?
1.1 billion. You can't make a
year.
payment like that. So now you got subprime guys.
Hang on, divide 1.1 billion by 36. How much does that company have to make?
You divide. That's a good point, by the way. You divide. You look at default payments on commercial real estate.
Okay.
So WeWork is the bigger commercial, because that's what they do. They rent the office space,
Yeah.
Then you default on subprime. You know what hit in 08 that destroyed the economy? Mortgage payments people started defaulting on.
Yep.
We haven't felt that yet. That's why this is a very different. And the reason why default isn't hitting, because people got low interest rates.
Right, that's what I was going to say.
Yeah, they got low interest rates.
Back in the 08, we all remember Nina, right? No income, no assets. Yeah, those are the good old days. Stripper making $100,000 cash, bought just 3 houses. Congratulations, we saw that.
Remember the
Big Short?
That's
Michael
the
Burry,
scene with
all
Steve
that.
Carroll. You have 3 houses and a condo.
And a condo, yeah, doing their thing. So
Anaconda, what'd you say? Anaconda?
Anaconda.
That was a song.
He goes, 3 houses, and she goes, anaconda.
I thought for a second you were singing.
Says,
But go ahead.
I don't want to touch you. Can you
Tom,
just dance?
I know you're a big Nicki Minaj fan. I know she's a huge fan of the case studies you do. I know that she cites you all the time. Respect.
Best
Here's my
analyst
question.
I've ever met.
I would like to know the mortgages that are defaulting now, percentage of how many are defaulting from the good old days, 3% or less, versus people that got a mortgage in the last, let's say, 24 months since mortgages have skyrocketed, where that comes in. You're like, all right, I just really wanted to buy a house. I missed the boat. I could have got 3% a year or two ago. Now I'm at 6.5%. Boom, default. I got laid off my job, unemployed, picket line, what have you. That would be an interesting case study. Have you seen
that? Would be
on that?
to see which one is defaulting. Somebody in that space has to break it down and see where these defaults are going to be, because they're not here yet. So a lot of real estate and mortgage guys are saying, well, you guys called the doomsday, all this stuff. It's not here. They're right. It's not here yet, because people are not selling their houses because they don't want to lose that 3% interest rate.
You know what I'm thinking about too, Pat? You know that, like, when you don't make a payment, not you, but I'm just saying in general on your credit card, they call the creditors. They call you. What is that $95 million phone call like? Like, hey, yeah, we work. Yeah, what do you guys do? And then, Pat, what's the thing that we showed, the 5 ways it's affecting the patients? Rob, one of them was you could still see your doctor.
Yeah,
where? On the picket line?
Yeah.
You're going to have to show up and be like, yo,
Hey,
Doc, hi.
just real quick.
Yeah, Doc, it's Vinny. Look, I have a rash. And he's like, just get the hell off the street.
Well, speaking of that $95
Nurse,
million
take his
payment,
temperature and blood pressure. Who?
Yeah,
we
under the
talked
tree.
about what was going on in China. Not Evergrande, but a company bigger than Evergrande in China, the commercial real estate developer. What was the name of that company? Do you recall? Whatever. They're a huge, massive real estate company. They had to make a $25 million payment, whatever the number was.
Yeah.
But they're valued at $100 billion. Some astronomical number, but they didn't make the payment. So not that our audience is concerned of what's going on in Chinese real estate, but here it is right here. Country Garden makes $22 million payment. with 15 billion more to go.
That's insane.
Wow.
Yeah.
So again, this is a sign of what's to come.
So if you like this clip and you want to watch another one, click right here. And if you want to watch the entire podcast, click right here.